TJ Podcast.
And welcome back, everybody. I'm very excited today to welcome a friend of the podcast, a trader, an investor, a great mind, somebody I've respected for a very long time. Guy Cohen is back to join us. Guy, how are you doing today?
Doing good. We're very fortunate that this lockdown, we can work through the lockdown. In fact, it's a good time for us in a way, but obviously we're highly aware of the fact that it's not great for a lot of people. So here to help.
It's one thing about being an investor, a trader, and an entrepreneur who can work from home with computers. I see your setup there. You're broadcasting from London, which is where you're based. I mean, that's where you've been running your company for a long time. You're from there originally as well, right?
That's right. So I'm nearby London, so just outside suburbs, and we've got it the same as other people. Obviously, the US and UK are probably the worst affected countries. We're very fortunately in an area that doesn't have very much of it. If you look at the map, there's not been that much around us. That may change. But we've got the added complication of we're about to have another baby in the next 2 or 3 weeks. And it has been a reasonably eventful pregnancy as well. So we have a few things going on, but by and large, we're so lucky. And like I say, we've been able to, trade as normal, if not better. Continue with the research that I have. I have a full-time research quant team and programming team, and we've launched a fund in this time in the last 2 months, and in the US, that is for US RIAs, and it's full steam ahead. So my team is busy. I'm really, really busy, and we're very grateful to have this as our chosen field.
And I'm not even sure I can do it justice to give you an intro here, Guy, but for anybody out there who's listening who does not know who Guy Cohen is, Guy is an author. He's an entrepreneur. He's built trading systems. He's been featured on Reuters and the New York Stock Exchange and Bloomberg and all kinds of stuff, Guy. How many books have you had published, by the way?
Well, 4. Let's not count the self-published ones because they don't count.
Yeah.
1,000 self-published. No, 4 by real proper, Financial Times, FT Prentice Hall, and also Wiley. All out of New York. All my stuff is American. You have the best markets, the most liquid markets, the richest markets, the best markets for stocks and for options. I only do stocks and options. And my software I developed was licensed to NYSE, Euronext, and Life exchanges. Obviously NYSE inhaled both those exchanges, and I licensed my software, my options software, for over 9 years. I did some analytical work for the International Securities Exchange as well for their options data, seeing if where there was any edge in that data. And so, and obviously I've worked alongside brokers, and now my algorithms are running investment funds for registered investment advisors in the US. So we're busy, and I also get to talk to great people like you who add a lot of value to people and really love to do that. And I love doing that too. So this morning I had a one-to-one. I have very few one-to-ones. I had an event 2 weeks ago in Miami, except for it wasn't in Miami. I was broadcasting it from here, but it was our 2-day event in Miami. Wow. And you guys have got to come over next year because it's wild fun. We do it in Miami Beach. We have a lot of fun. I have a very strange relationship with my members. We had a 80% return rate, as in re-attend rate for this event. It's pretty much what we normally do. So that was pretty cool, with obviously quite a lot of new people coming. That's amazing. Well. But we normally hold this particular options one in Miami in April, 2 days. Obviously, we had to change it to being all online. We're pretty well equipped for online, as you are as well.
Yeah, we do everything online. I mean, thank God for Zoom and online, right? I mean,
well, we've been doing sort of live stream from our physical events for 7 years anyway, and it works really well because 3/4 of people go to do the online one. They see me on the camera, and they feel they're part of the event because they're getting a live edit either with my screen or with me or the crowd. And so we're used to doing that, but this one had to be all done from home but it was record attendance. But the funny thing is that I have a weird relationship with my members in that we become friends. You know, that we get to meet. They're real people. I'm a real person. I'm very approachable. I make myself approachable as far as I can. And I'll take them for dinners and they'll take me for dinners. They give me presents for my babies and my dog. And it's a very interesting relation. Now, part of that is fueled by the fact that I've made them a lot of money. So we have this kind of thing that, of course, we're going to be friends if they're very happy with me. But it's a really lovely thing. And
I think it's more than that, my friend. I know a lot of educators. I can tell you this. It's your passion as well, which is what I've always picked up in your books. And one of the reasons why I follow you and really love having you on the podcast, I think it's more than just the financial return. People build relationships and whatnot, especially if you're providing value in a time of uncertainty.
Yeah, that's the thing. Yeah.
I mean, that's the world we live in right now. There's so much uncertainty. I wanted to get your perspective on several things here, Guy, because I think it's a fascinating market. Number one, we're recording this early May, 5/4/2020. There's an old adage in the market: sell in May and go away. We're 65% reported through the earnings season, which, by the way, has barely been meeting depressed expectations. But this is a crazy world we live in, Guy. Early March, like you were talking, we were talking as well through February and March about this COVID-19 situation, the potential for disruptions in the market. You actually put a tweet out there, I think on March 4th or 5th, looking at a pivot where you were thinking it's going to go to the downside. Number one,
that's right.
How did you get in front of it so early? Number one, what do you think?
It was a classic. Yeah, very easy actually. I don't know whether I can share my screen, but I can just show it to you. It's one of our classic patterns that we look for. Obviously, it's not going to happen that much, but one of the key things. So what I do is I look at what options traders are doing, and it's not just based on volume. Volume does not give you enough. For a start, volume doesn't give you which is the buy side, which is the sell side. So that's a problem. You don't know whether people are doing covered calls, which isn't necessarily a bearish thing, is it? But if they're selling calls, it's bearish, but it might not be bearish. It might not also be bullish. It might just be one of those noise things that doesn't really matter. So the quality of the data that we're looking for and how we analyze what is going on with option activity, whether it's open interest or volume or implied volatility, and the cake that we make around that is really important. So it's not just quantitative data, it's qualitative data as well. So what we look for is a feel of whether it is position building activity we're seeing, or whether it is noise, which we're not interested in, or whether it's hedging, which we're also not interested in, because the most powerful of those three is position building. People are laying down risk, heavy risk with leverage in order to build a position. And we want to tack onto those guys because on balance, they are likely to be, I was just looking at my dog there, seeing if he was coming in, but it's likely to be the bigger players. Obviously, we can see that in the volume and open interest, and likely, if they are bigger players, to be the more sophisticated operators who have access to better research. And they've certainly spent a lot more on research than anyone else. So I want to ride on those guys' coattails. Now, let's go back to where we were. So the tweet I put, and you know what it's like, guys, when you put your neck on the line, you're out there to be
crucified sometimes, for sure.
To be beaten up.
Yeah, for sure. Yeah.
But it's really worth it sometimes. So this is what I felt very, very confident about. So it was really a win-win situation for me. There were a few things that were going on. One, my options indicator, we call it the options volatility indicator, or OVI for short, was just flashing red everywhere. So I knew, and this was reminding me of other sort of crashes we've been on to, and I knew we'd already had one leg down. This was just lining up for another one because we were retracing. So I call it, I've got a setup called the pullback retracement. Sorry, the pullback reversal. And it was just perfectly positioned because a lot of these pullback reversals we're seeing on key stocks were doing so having crossed down through a 200-day moving average and then bumping their head back on that 200-day moving average. It's classic, even without that 200-day moving average, but with a persistent negative OVI as well, you're just rubbing your hands for the entry point. And so
Sure.
It was on your time would be the 2nd of March. My time, it was, if I look at the actual timestamp of the tweet, because it's kind of interesting to see, it was at 12:17 a.m., so early hours of March the 3rd. So for you, easily March the 2nd, after the close, of course. And if you look at that, I don't know whether I can show you a chart of
I
that.
think this is mostly going to be broadcast audio, so we don't have.
Oh, okay,
I don't think
fine.
the visual
So
will be there.
just go and look at yourself a nice chart of whether it's the S&P or the IWM or whatever it is. The IWM is very instructive on this one. It's been really, really well correlated.
Mm-hmm.
And loads of key stocks. Well, at that point, yes, it still went up for another couple of days, but that's not our entry point anyway. We're just waiting for this thing to happen, and then literally the avalanche then happened.
Well,
so,
you talk a little bit about big money and how you're following those guys around. You know, famously, even Bill Ackman came out and said, you know, we were going short early in March, things like that. Big hedge funds were doing that. And I remember on 3/2, early March during that period, I was teaching a live class in New Jersey about stock markets and technical patterns. I remember that day very specifically. Markets were flashing bearish signals, and you kind of got in front of it. And we even know this now from bank earnings, Guy. You know, after the banks came out and reported earnings the last quarter, they said, even though we had losses in other areas like credit services, stuff like that, they made money trading, didn't they? You know, with the volatility.
Yes,
So once you saw the signal, how did you play it down? I mean, put options.
Well, there were a few. Well, there were different issues, as in lots of different securities one could play in that. So there was one setup that we played, which is called the railroad track. So as the steep retracement was happening and bumping its head on key levels, it was forming what you call a railroad track. So a railroad track in this particular case, the retracement was going up. So one bar was hollow green, as in opened low, closed high, and then the next bar the next day did exactly the opposite and just ate up all those gains, opened high, closed low. That's a setup entry point if the next bar then breaks below the low of those two bars. That was one setup. Mm-hmm. And the other one was just a straightforward kind of flag setup, either crossing downwards through the sort of the diagonal parallel of that little bear flag, or passing through the low of that bear flag. So there were several instances, whether it was indices or individual stocks, that were doing exactly that and lining up for us. And of course, my filters find them in a second. So that was what we did. And I just wanted to give everyone a heads up. I also wanted to show off a little bit, because I thought, I felt so confident, and I thought I just can't lose here. So that was really
there's a little bit of pointing at the scoreboard, right? When you hit.
Oh yeah, come on.
For sure. I mean, I think naturally we all do that. There's no.
Well, it was so low risk, because people go, one of my, people, they go, oh, Guy, can you do more of that? I go, listen, I'll do it when I know I'm going to be right. So, I'm in tennis, like if you're old school, think of the difference between John McEnroe and Ivan Lendl. Well, it may not be that sexy, but I'm an Ivan Lendl. I preferred McEnroe because he's exciting. He had the feel, he had the touch. But I teach people how to be Ivan Lendl. Now, Ivan Lendl actually went and won more majors than John McEnroe because he had a system. John McEnroe, I don't know who Ivan Lendl
is. I got to look him up now. Is he a British tennis player?
I mean, I don't know I'd have to find a different sporting analogy, but
No. You're good with it. Is he British?
No, Ivan Lendl was Czech, and John McEnroe is obviously from New York. But John McEnroe, you must know him.
Oh yeah, the red, fiery, yeah.
Yeah, but
yelling
he was just
at referees.
100% talent. I mean, in terms of raw talent, the guy could flick his wrist and make impossible angles that Pythagoras hadn't even thought of. Whereas Ivan Lendl was rather dull, rather metronomic. He had a system. But guess what? Of course, you watch John McEnroe every day, but not everyone can be a John McEnroe. Right? You're just not born with that. And that's the same with trading. 99.99% of home-based traders cannot be McEnroe when they're trading. What they can be, if they learn a system, is Lendl, and they'll make out really well.
Sure, which is where rules and systems and that's true for trading as well as investing, in my opinion. We've got to move this forward to kind of where we are now, because I do find it really fascinating that you did kind of nail that in early March. But then, obviously that's now history. We had the market crashing, one of the worst months in the history of the markets during March, found a bottom there. It's now in somewhat of a V-shaped recovery. I don't believe in the rally here personally, Guy. Anybody who listens to me knows I've been on the fundamental side of the bear side of this. So where do you see the market today? I mean, we're sitting here on a pullback and after a huge V-shaped recovery.
That's right. So this is the next thing I did. Okay. So Guy, are we going to be brave again here, or so I had that whole chit chat with my members, and I go, look at this chart. And there's two things that are going to happen once we'd hit the bottom. We would obviously start traversing in sort of like mid-March. There are two things I think could happen at that point, and I was open with it. And they're on my videos and my weekly reviews. The first thing that could happen is look at the chart of the 2015 flash crash. Okay, that could happen. So we could bump along for a while, and then we'll see. Because we were only in the first phase of that new bounce when I was talking about this. The second thing that could happen, which I didn't think was going to happen, but it did, and that's where opinion has to be removed from the equation. But the second thing that could happen, I said, was that we could drift up to pretty much near the 200-day moving average. Now, if that happens, obviously we only do our favorite stock. By the way, can I just tell you what my favorite stock is?
Sure.
Okay, write this down. Everyone write it down. What you're
Today.
Doing. Okay, I got the ticker. Here's the ticker. This is the one you should trade this is the one you've got to trade by your life. It's called TWYS. Now, if you look up that ticker, look it up, what you'll find is there is no such ticker.
Yeah,
but
that's right.
What it is trade what you see. Now, what does trade what you see mean? Trade what you see, and then all my members just tell me that mantra back and back. What it means is that whatever the system is that you are trading, in our world, it's OVI, we're looking at options trading activity in a specific way that no one else looks at, but we're looking at specific setups with specific combination of setups, if you like, and that's what we see. And we're only going to go when that system says we should go. So trade what you see. So here's where we're at now. We didn't get the 2015 flash crash and then sideways move and then recovery. What we actually had was a V shape, but this V shape kept on going on and on until many issues were either at their 200-day or near enough. Even the S&P was within a little notch, within a few of it. And that then now you start to use a bit of logic. You go, can the markets really be higher today than they were for the beginning of January? And it's a question. We're still going to trade what we see, but can that really be the case when we know that it's not just a blip that's happening? It is businesses grinding to a halt, sectors grinding to a halt, industries grinding to a halt,
consumer behavior grinding to a halt,
and the entire fabric of society having issues. So let's just take Miami, where I held my event. We held it at the National Hotel. Great fun. That's closed down. All its suppliers will have closed down. All the people who then create the coffee and the this and the that, they're all closed down. This is unprecedented. And to think that we can just emerge from this in 6th, 7th week of lockdown in the UK. I don't know what it is for you guys over there, but it's obviously different from state to state. We're kind of like your 51st state. Anyway.
I've been locked down for almost 8 weeks, probably personally. I think the US went into lockdown about March 13th or something like that. So probably 7 weeks now, I would guess.
Now, the impact of that, what is the impact of every fresh week of lockdown or effective lockdown? How long does it take then to recover? Look at airlines. We're going to end up with potentially worldwide less than half the flights that were available before. And then what happens as a knock-on effect to the resorts that we were going to before, completely, blasé about. So the economic impact in my mind, like you, must be profound. The market has seemingly, and again, I talk in kind of vagaries, but kind of like to my opinion, which I want to take out of the equation because we're going to trade what you see, but it's like it's diluted. And I don't know what's going on in that way. But when I get clear bearish signals at this point, and by the way, I have ridden this up to a large extent, but when I get clear signals that I can safely go short again or buy deep in the money puts, then we'll be on it because it feels like it's the right thing. But again, TWYS, we'll trade what we see in terms of the system that I do, and so pretty much I'm with you.
Yeah. I mean, fundamentally, I don't think there's really even a debate, quite frankly. It just depends on how much of this stimulus is going to actually come through and help people. Obviously, there in the UK, I think about consumer behavior, Guy. I read a report today out of London that 65% of people, when polled and asked, said, "We're not going out and living our life the way we did." Now, I'm saying that kind of wrapping it up in a whole survey. But they asked them questions: Will you go to restaurants? Will you go to crowded gatherings? Will you go to this and that? And many people say, whether you lock me down or not, my behavior will not be the same as it was before. Right?
I think pre-vaccine, that's going to be the case. After they get a vaccine, I think that how rude can I get on this? Or is it?
You can say
Are you
whatever
good?
you want.
Are you good God-fearing folk, or can I say something naughty?
Say
here?
whatever the hell you want, Guy.
Right. Well, here's the thing that I want to look for is I want to know which drug companies are making all the medicines and treatments for STDs, because once this lockdown's over, all that single community of all age groups are going to go crazy. And if you don't believe that, you better believe it. They're gonna imagine that you were single right now. You'd be going nuts. And when this happens, and you've got the Tinder going, they're swiping, and who knows what you're talking about on the phone, that's going to go bananas. But one thing I will say is I did call a low during that time. Actually, in the sort of early May time, I said that the what was a meaningful low for the markets was the Trump election levels of November 2016. Now, I called it in the 2100 odd for the S&P. Now, it didn't quite get to 2100. It was very close, though. It got into the 2100s, obviously. Mm-hmm. But the Dow did meet the low or the level of the Trump election. So, and I see that as a very significant level, and because it's a psychological level. And especially now you're in election year again. So it's going to be really interesting to see that in the next down cycle, as I think is inevitable, how far to that we get again, and potentially whether we actually take it out.
You know, what's interesting, the STD call I find fascinating. In economics, they call that pent-up demand, Guy.
But think about it, right? It's like,
I'm sure.
Come on, let's look at it. Let's go and make this our thing.
Back out there and live their life. I get it.
Exactly. Well, look, I'm old. We're expecting our second baby. I told my wife, look, I'm out of that whole thing now. So don't look to me for that. I'm done with all that.
Sure.
I'm 49, so I'm done with all that.
Second baby's exciting though. Congrats on that in advance.
Well, they all call me when I go to the school with my first, who's 3.5. Obviously, we've been in lockdown, but they always tell me my grandson's doing really well, so that's good.
Mm-hmm. I want to get your take on a couple of other areas across the market. Crude oil obviously went negative pricing here recently. I've seen the contango starting to tighten up in that market. You probably track both Brent and light sweet out of the U.S. What's your read on crude as far as how it might impact global economics, what it can tell us, and what you're thinking about moving forward?
I'm not an oil expert, but obviously, there's going to be a point. If I look at it all, OIH, for example, I see that, a bottom looks like it's in, and I would, with enough enthusiasm, with enough, I mean, again, I'm very myopic with what I see in terms of I'm very narrow-minded with what I see. Mm. I look and see what the options guys are doing. I see if they're potentially giving me a heads up. I look to see if the chart is giving me a safe entry point where I can construct a very conservative trading plan around, and see if I can pinch a bit there and even ride it. For now, there is no point, but there's obviously a change. If you look at my charts of OIH and others, whether it's Schlumberger or those kind of people, it's a different landscape today to what it was, say, a month ago, in terms of at least the leverage going into it, but it's not safe yet to enter. So
the holders, those are companies, right? I mean, so you're more likely to play the oil companies than the commodity itself. Is that?
No, I'm more likely to play wherever I get a very clear signal. So that's the bottom line for me is the clarity of signal that I'm getting. And if I don't get a clear signal, then forget it. I'm not interested, because to me it's all about following what options traders are doing, then big options traders are doing. And whether that activity looks like it's more like position building than hedging. And I think, to be fair, there are better plays to make at the moment. So, unless I see something very clear, and obviously you can see in the last couple of days it's back down again. Unless I see a very clear signal that, we're on for something, then there'll be other better things to do.
Sure. What about gold? I mean, is gold something you target, something you've been focused on?
Yeah, well, it's very interesting we say about gold, because you've obviously got the gold and then you've got the gold miners, and it's jumpy and volatile. I mean, it's extraordinary for such a well traded sort of issue with on the ETFs. It's been very, very jumpy. So I made a bit on Nugget before it went for 2-to-1 rather than 3-to-1. Newmont Mining was interesting. So, and I'll tell you why it was interesting. So Newmont Mining in sort of late March, early April, again, it crossed the 200 one way, then the other, then consolidated, and then the options traders started going in, and then it breached, just over 50. That was one of my setups. So that was great. But again, I'm going to be so boring. I look for my setups. And if I get my setup, then that's great. And if I don't get my setup, I'll look another way. So Newmont Mining, have a look at that chart and you'll see early April what happened.
Oh no, those miners, even the GDX and some of them about that time period, they were high basing, and you got that nice signal, beautiful candle on Newmont. And the miners are an interesting part of it. I still like GLD, by the way. I like that product, especially as an investor. I know trading and investing are a little bit different mindset, but I do like the ETF GLD as a way to get exposure to gold.
Well, it's got the GLD, as far as I remember, is actually backed by real assets, is it not?
Yep, sure is.
Yeah. So now Nugget is a real tough one, because Nugget, you can get the direction right and still lose money. So, and I've been on both sides of that coin with Nugget. So I remember doing one trade. I go, this is great because gold's going like a train. I'm good, but screw that. I'm going to go 3 times leverage, and I'm going to go the options on 3 times. And I lost. And I go, how can this possibly be? So the algorithm that with the 3 times, you've got to be a little bit careful with sometimes. And so, sometimes
I'm in the firm camp. Those leveraged ETFs are only for professional traders. I mean, if a beginner's out there, I usually try to steer them away. Isn't it easier to make a simple trade? Find a simple chart. You don't necessarily need the leverage when you're a new trader.
That's true. But Tim, let's be honest. Even you have that little devil inside you that does something a bit naughty once in a while, right?
Yeah. Guy,
because guess what? We're all human beings, right?
I think I've got you in one of those moods. Like, you're ready to take some risk. There's no doubt about it.
No. I'm really conservative, but part of the system that I have created which was really created for myself, acknowledges my own weaknesses. And I think that there are systems out there that have merit, but they forget that you're a human being.
Sure.
And that is a major weakness of those systems. They say, when you see people go, trade robotically, trade like a robot, trade like a machine, we're not built that way. We are built to break the rules. And so what one has to do is build rules that one can take with relative ease, in a way that acknowledges our human frailties. And, I would, like I said, I did this 1-to-1 this morning. I'm only doing 2 this year, so that's great for me. But whereas my team are doing the other ones. But, we were having a chit chat, and the guy, obviously, he has the biggest problem that he has is in securing, don't have to take it, but securing that first conservative, easy profit level. Mm-hmm. And because he always thinks there's a little bit more he can get. And that's the biggest mistake that traders make.
Mm-hmm. So I find having taught and mentored students and all over the world and one-on-one for the better part of 15 years now, I find people are in 2 radical camps on that. You either got to grab them by the collar and hold them back because they want to take too much risk. They're just so ready to go in there all the time, push all the money in, over leverage. Or sometimes you got to push them in the back and just make them go for the swim, get them into the market.
Yeah. Oh yeah. Because they get the inertia. They got the fear, they got the inertia, and it works. But and I suspect you have experienced both as a trader, because if you've been in the game for any time, there are times where you'll get whacked because you broke rules or didn't have rules or whatever. And there's that little bit of nervousness, and it takes quite a lot to get back on the horse. So I've known that. I've known pretty much every experience there is to have in trading, and that's the system that I've developed. Not only acknowledges the fact that there's an empirical basis that must be there, because otherwise you're just whistling in the wind, but there also has to be a plan that can cope with the fact that we are emotional and human beings, and we're tempted, we're easily led astray. So if you have a plan for, a discretionary plan for a home-based trader, if it doesn't somehow take care of that human component, then it will be doomed to fail, because we're not robots. We're not machines.
Just two more questions for me. Number one, over the weekend, we saw our president, President Trump, kind of banging the drums of rhetoric of nationalism, talking a little bit about China and tariffs again, and even Pompeo out of his administration saying, hey, listen, we want to do more American-made goods and change the supply lines and things. Do you think, and on the China issue, number one, do you think this is here to stay? Do you think it's going to happen more and more? And then over in the UK, are you also starting to see some of this as well?
Well, it's a good question. Now, I take it that you and Matt are on different sides of the Trump camp. Is that right?
No.
You on think?
We are, yeah.
So are you pro or anti?
I am a left-leaning hippie, dancing in the mountains around a fire,
naked round the totem pole.
Yes,
lovely. I
right.
like it. I'd like to see that.
You wouldn't.
Well, only for amusement. I mean, only to learn something new. I'm always wanting to learn things. Britain. Okay, if that's the way you're going, and we can be a little bit polarizing here, then obviously my intellectual side and my side of reasoning just sees him as a bit of a buffoon, as we all pretty much do in the UK. In that, he just comes and says nonsense a lot of the time, and then lies about what he said the day before. And this is why I have slightly issues about what might have happened 2,000 years ago, because we can't even agree on a video clip that we can all see and what someone said. So how on earth can we agree on what someone reputedly said with no records other than word of mouth 2,000, 3,000, 4,000 years ago? So I have some issues with all those things. My biggest beef with China is really one of the way they treat animals. I love animals. I'm an animal lover. I am revolted by what they do and how they treat. They like in some medieval, barbaric situation.
We've got to close those wet markets, don't we? I mean, the international.
It is an international scandal that they are allowed to happen. They are a rich country now, China. They have every means available to them to stop that nonsense. Now, where it comes from, whether it's from a lab, I mean, no one's suggesting they did it on purpose. I think that's what's interesting about what's come out of Pompeo and Trump. Pompeo actually did say he didn't think it was done on purpose. But clearly, they have a culture and a way of treating animals that is, to my mind, utterly barbaric, and someone has to do something about it. Now, does that mean that you're going to close the supply lines? I think that pragmatism will not allow that, because there's the big I word that will inevitably happen if you take too much of all that back in-house, and that is inflation. And inflation will be ruinous to the US and the UK and most of the EU, all highly leveraged economies. So on the one hand, yes, you can say, oh, but they'll inflate their way out of the debt. But in order to inflate their way out of the debt, then they might raise interest rates, which would be catastrophic for the vast majority of the middle class, who are highly leveraged in their properties. Because don't forget, in the last 11 years, you've had an asset inflationary bubble. You've had an asset-backed bubble rather than, and so people have had to pay more for their homes and this and that. So that is, to my mind, probably going to be more in the realms of rhetoric, because to shut that supply line down. So
you think they're just huffing and puffing right now for whatever reason? You don't think
there is, because I think that to bring everything in-house would be ruinous. It would be literally people, and that's.
You are very. You think through this stuff logically, obviously, critical reasoning and all that kind of stuff. Think emotionally about what you just said a minute ago, though. Don't you think we have the risk of emotions running hot and high right now, and people, even on both sides, on any side of this issue, China, the US, Europe? I even read some rhetoric out of Germany where Angela Merkel was talking about China as well, that you might see tariffs, you might see an international action. And what is that? Do you think that could derail stock volatility and throw us into another tailspin?
Could well do. I mean, it could well do. I think that at the end of the day, some sort of pragmatism will end up winning the day, because I think that the central banks and the reserve, the Federal Reserve and stuff, do have an awful lot of say, and they will tell the politicians, look, do you realize if this happens, you're screwed and you won't get elected. So there's a very tricky balance in this year where Trump and the Republicans are desperate to be reelected. They do have a free hit because they don't have a particularly brilliant opponent. I think if they had an Obama type of opponent, I think they get beaten. But with Biden, it's very difficult to predict because he's a very likable guy. But there is enough doubt about him in several ways, either his age, his mental state, his past. Well, I think the past with sexual whatevers. Well, Trump's got plenty of that too. So maybe let's take that out of the equation. But there's enough doubt being sown. It's a bit like John Kerry years ago. Somehow the Republicans managed to make him out to be the coward, and yet he was the one who was brave in Vietnam. So how they spun that, I really just couldn't understand. And the reason I'm interested in US politics, by the way, isn't it for two reasons. Well, one, my first wife was American, so and my cousins in New York are American, so I've got a lot of American influence with me. I got a family there, an ex-family, and this and that. Secondly, obviously I trade the US market, so obviously I'm deeply ingrained in all things US, apart from your sports, but that's another conversation. And then thirdly, because there's always been this high possibility that I would move over there because my business is over there, my activities are over there.
Right, you're published in New York, right?
Yeah. Of course, all that. Well, I only deal with US markets. Everyone says, if anyone asks me about UK markets, I have no clue. I don't know. There's not the options market to do that. So I'm so interested in the US. I admire the US so much because here's the thing. You are an incredible economy. And one of the reasons is that to really succeed in America, everyone does have that opportunity, but you have to hustle. And that's the difference between that and a lot of different economies, in that there's not as much opportunity, regardless of your background, to hustle and really make it to a massive degree. Now, one of the reasons why you don't have that in the UK is because we just don't have the population you have. You got, like 6, 7, 8 times the population that we have. So one can be fairly remote in Oklahoma and yet still be a multimillionaire because you have captured that niche in that state, or in that little bit in that county, if you like. And we just don't have enough people over here to be able to compete with that. And that's the same with many countries. You're a very big country, but you've just got this ability to innovate, especially on West Coast and East Coast, financially and technologically and in all kinds of other ways, that regardless of what happens from here, the US will still be a leader because you have the entrepreneurial spirit ingrained in you. And if you're looking to make money in the markets, you don't need to go and look around. The US will always provide those opportunities. So yes, this is going to be a tough time, but long term, would I bet against the US? Absolutely not. I would bet right with you, because you'll find a way. You always have done. You always will do, unless you really get an idiocracy. But we're a few generations.
We'll see. That might be coming.
Well, you're on the way, but we're a few generations from a true idiocracy, because you do have some incredible minds over there. And
innovation and tech and all those kind of things.
Of course.
By the way,
yeah.
This is exactly what Warren Buffett said in his shareholder meeting over the weekend. Long term, the U.S. spirit is going to triumph. There's no doubt about it. But he also has not bought into any new stocks here in the last little bit of this rally because he doesn't trust it either. So the short term and the intermediate term, we don't know. Here's my last questions. By the way, you bringing up U.S. politics, one of my favorite things about lockdown and quarantine is I haven't had to talk presidential politics. Nobody cares. So you just ruined my day now. Now I got to think about the election.
No, now you got to think about the companies doing the STD medicines, right?
That's right. I'm going to go do some research.
Go do that.
My STD watch list.
Exactly. It would be the new thing. Like, what do you call it? Someone actually called it on a group I'm on in Facebook. They go, oh yeah, which ones do the stingy pee stuff?
Oh, making me laugh. All right, I'm going to make you make a call here. The S&P right now, 2,800. We hit a low at 2,200. Do you think this market in the next 12 months or whatever window tests that low again?
It was just below 2,200, which made my call of 2,100 almost right, by the way. Just being pedantic. I think there's a high chance of that, yes.
Yeah.
Logic dictates that. The thing that would sort of scupper that is because so much of the index is weighted towards such high quality companies, Apple, Google, Microsoft, Facebook, which are equipped to weather the storm better than any others. That's the only thing that could sort of slightly scupper it. But then go down to the IWM and stuff like that. It's very difficult to see. Once the market, here's the big question, here's the big word that you've got to really pay attention to, and that's liquidity. Because we're going to find in by late summer, maybe it's the July, August earnings season or into the fall, is that just where's the liquidity going to come from? Mm-hmm. Where are the customers? And it all feels through. So right now we're in this kind of like tub thumping. We're going to get through this, American spirit, English spirit, everyone's good spirit. Mm-hmm. But there is a reality dawning that there are industries that are literally on life support. And the customers are not going to come back immediately. That's the problem. Eventually we'll get there. But right now, this year, every week we have in lockdown or virtual lockdown has a longer consequence than just the week it's down. And we haven't and the markets have been delusional about that.
At lower levels, would you be interested in longer term holdings, buying into these deeper pullbacks?
Yes, absolutely. I mean, I'm always interested in certain situations for longer term, but I could get stopped out at the same time. So, I am more, let's just say you get a world-class company like an Apple, Microsoft. I mean, Microsoft's so well equipped for this kind of situation. So long term, if you get a big dip with Microsoft, as you did, but you want to hold it for long term, boy, it's a great company. It's a world leader. It's going to continue to be a world leader because it's basically based in the cloud now. They've totally, since Steve Ballmer left, that company changed course. And boy, it's difficult to ignore.
Just incredible. I love your office setup there, Guy. I really enjoyed the interview. I've taken enough of your time here today, but as always, my friend, entertaining, insightful, and enjoyable all the way. People can find you on Twitter. I believe your handle is at Guy K. Cohen, correct?
At Guy K. Cohen. And maybe we'll do something, we can figure out something together and do whatever. But yes, it'd be nice to see you guys. I think in the past we've had a few bits of correspondence from your people. Yeah. So it's always, we always do our best for you.
Yeah, no, you're always welcome here at Trading Justice in our community, Guy. We get a lot of positive feedback from the last episode you were on, and we appreciate you, man. You're doing great things out there. Keep up the good work, okay?
We didn't talk about Stingy P last time, so let's just see what the feedback is on that this time.
Fair enough. All right, guys, we are out. We'll be right back with our special presentation after this break.
TJ Podcast.